Good morning. It's July 6th. This is Jeffrey Cohen, Chicago Quantum Investment Advisor Representative, here to talk about the markets, here to share any insights we can. And it's an interesting day today. We're making some notes because we saw a couple things this morning already, and we're probably going to share our model. Just a lot going on. So, data points. Housing is getting weaker, at least in San Diego. There's somebody we follow that gets data on housing and mortgages. So it's interesting. Inventories are building. People aren't selling. Housing prices aren't continuing to rise. You know, all that frothy market where people are making, like 20 bids or 20 different bids on a house. People are bidding over the ask. Still may be happening, but in theory, what we're hearing is it's happening less. The second is currencies. The US dollar is so strong right now. It's tremendously strong. The euro dollar is below $1.02. Mexican peso is heading to 21 pesos per US dollar. Bitcoin, we have another bankruptcy. I want to say it's Voyager Digital, right? And these are lenders. So what happens is people give their money to Voyager Digital, they buy crypto, but then they lend out the crypto that you put in there to somebody else. And what happened was, it's like the Wild West, right? $775 million in loans are in default. And this is to two lenders. But what's interesting is they have over 100,000 creditors. So lots of little retail investors or retail savers put their money into Voyager Digital. It looks like they're going to lose it. And in fact, 700 million of it is in a Singaporean Three Arrows hedge fund, and they probably don't even have recourse to go get it. They declared bankruptcy. They're safe, which means Voyager Digital is out. And so my guess is people are just running to the safety of bonds. And we look at the 30-year US Treasury bond. It's called a bond because it's 30 years. The yields are down almost 3% again. This is over a month. If we look over 3 months, you can see they're not quite as down as they were. And over a year, you can see, they were down a lot more. But, it's interesting, right? So 30-year treasuries at 3% interest rate when inflation is running at 8.3%. So people are willing to give up 5% of their purchasing power in order to be safe. That's a wow to me. 10-year treasury note at 2.8. That's another wow. I'm tired. Not enough coffee. Up late last night. 10-year treasury note at 2.8. So, good news is interest rates, long maturity at 10 years plus are down, which means your mortgage rates are probably coming down. I'm not going to guess. We're just going to take a little look. How are mortgage rates doing? Yeah, we use a particular data point. So Fred says they're 5.7. Oh, that's as of June 30, though. That's all right. So they've come down. They were 5.81, and they've come down 5.7. So down 0.11% according to Fed. Just search on Fred. Federal Reserve Bank of St. Louis. It actually works pretty well. They've got great data. Give me my mortgage rates. This is Mortgage News Daily. I like Mortgage News Daily. 5.5%. So they're down, according to this data, they're down 0.7%. Down to 5.5%. So all right. So if you locked in a mortgage, whatever, 2-3 weeks ago, you probably are not real happy about it. So that's interesting. So what else do we like to look at? So market breadth. So the market direction and market breadth. So yesterday the market acted a little strange. We saw this as a low conviction day yesterday. I don't even know what we see today. To be honest with you, I'm so tired. I don't know. I'm looking at the data and nothing's sticking. That's weird. Normally everything sticks. Normally I get a point of view pretty early. I'm wearing a blue shirt because I just don't know. So the S&P 500 was supposed to open lower yesterday, and it did, but spent the entire day climbing a wall of worry and actually recovering. We called the market at 37.50. It hit 37.50. It climbed up to 38.30. NASDAQ, just a steady rise. The Dow rise. And it's funny. So a couple things that we look at. That steady rise happened all day. I remember that. So new lows to new highs. So you had 1,040 new lows, 31 new highs. And these are stocks. How are we looking at the fixed income? Jeff, you're talking about bonds again. Yes, I am. Corporate bonds. FINRA. FINRA-markets.morningstar.com. FINRA's Market Data Center. Comprehensive tool. It's very helpful. We like it a lot. So what did it tell us? Told us convertibles did great, almost up 2-1. High yield, we're about flat. Lots of new lows in high yield. Investment grade, also up 2-1. But still a lot of lows to highs, and so debt is getting less valuable. Debt is getting more risky. So your overall all issues is 48 new highs, 736 new lows. What else did we see? Oh, I don't know if I believe all this. Dow futures are down, and looks like the Kospi was down. Looks like Malaysia's down, which is unfortunate. I like Malaysia. Mainland China is down. I mean, I like the whole world, I guess. Hang Seng is down. The Nikkei's down. Mexican stocks yesterday were down. Jakarta. Come on, guys. Love Indonesia. You guys are down almost 1%. You're going to be starting to brush up against your 52-week lows if you keep this up. Australia's down. So what's up? What's up is Europe. Europe is up. UK, France, Europe, Spain, it looks like. Germany, Belgium. Oh, India was up. Okay. So hard to know. Lots of things were down, lots of things were up. So mixed global markets. Asia was down, but now Europe is up. It's interesting. I don't know what that means anything, but don't know if any of this means anything today. I'm not feeling very positive about anything right now. Let's see. We'll go back, we'll check crypto, see if it's still around 20,000. Yeah, 19,994. Bitcoin at support level of 20K. All right, so you can see, right, you're not going to get rich reading someone else's news. This is crap. It's crap data. So what do we have? There's no news. Well, the housing price decline headline is probably important. And core logic. Yeah, so. And 30-year mortgage down to 5.5. This is interesting. 30-year mortgages decreased to 5.5%. We saw that already. Core logic for May. Housing prices up 20% year on year in May. It's the CoreLogic Home Price Index. And they call it HPI, and it's trademarked. Okay, interesting. Tells me everything is awesome. So, Jeff, what are you telling me here? Do you have any news? Anything? Anything? All right, well, let's take a look. So the S&P 500, the Spider, the QQQ, NASDAQ 100, IWM, the Russell 2000, and just taking a look at Tesla, really no movement. We take a look at the top stocks in our model, and again, you can watch paint dry. By the way, we are painting something in our house, so we actually are going to watch paint dry today. I always think it's funny when you get to say an expression like that and it actually is true. Probably only take a few minutes, though. I'm not going to watch it dry. So first off, no stock has a negative CQNS score. The best scoring stock has a positive CQNS score. That means there's not a single individual stock that has a better risk profile than if you held all the stocks. There are no anomalies today. Now we took out the S&P 500. We took out some of these others. And we kept the S&P 500 in the down run because, where do you stop? There it is. So the equivalent of a negative is a positive on the down run. And the positives on the down run are TNA, QQQ, Spider, IWM, Marvel Technologies, MRVL. So in our money losing department, MRVL scored better than all other money losing stocks, and it scored better than all money losing stocks. So Marvel Technology Inc. has an expected return of 8.66% over the next year. That's interesting. And then TNA, IWM, Spider, IWM. These are all the stocks, so to speak, or the ETFs that the model likes, and in this order. From a risk return perspective. So Yeah, slightly higher return. No, I did it wrong. QQQ. Yeah. Okay, that's interesting. What else we got, Jeffrey? And by the way, the model likes stocks that are just Microsoft, Apple, Berkshire Hathaway, Crestwood Equity Partners, and then a bunch of just sleepies. The model's sleepy today. So one thing that's important is the S&P 500 variance. We're going to take a quick look at variances. The risk-free return we still have at 1.5%, probably going to have to go up. But you're looking at actual returns in the model. Actual returns of the indices are very poor, very weak. Now we run through our data in our model and we only use U.S. companies, which is helpful. So Georgia and the USA actually are United States. That's fine. What's interesting is the variance of the uprun. Is 0.1614. The S&P, so you still get a better variance if you buy the index. The expected return of all these stocks alright, let's go through. Yeah, there's stuff we saw. There's weird stuff in the data. There's probably still a chance to make some money in this market. There is. Wow. So the edge in our uprun is tiny. And it takes 16 stocks to get there. Evenly held. The model wants you to spread your risk for really roughly the same risk. You can go 22 stocks. And if you really want to go crazy, it looks like for a very similar edge, you can go 25 stocks. So what this is going to get you is this is going to get you for 25 stocks evenly held, you would get more return, less risk. It's so interesting. I'm looking at them, and they're risky. They're money managers. They're a little bit of tech, a tiny bit of retail, little Bitcoin, little new economy stuff in there. Wow, that is so interesting. Cleveland Cliffs is in the pick now. So the model is preferring the downtrodden stocks. That's so interesting. I'm looking at it right here. Yeah, maybe it's time. Maybe it's time to play the model. 25 stocks evenly held, like $1,000 each. See how we do, right? It's crazy talk. It's so interesting, so interesting. Now on the down run, which is always a little less, seemingly a little less exciting or insightful, but these are the stocks to avoid. It's the usual suspects. You know what they are. They're stocks that have been memed. They're stocks that have been, there's really nothing behind them but a lot of hot air. So, how's the variance doing on the overall down run? That's always good, because you know, we try to understand the variance of the market and to here. So on the down run, your variance is 4.8. So 4.8 versus 1.6. So you've got 3 times. So maybe the net here is, if you invest in money-losing companies, then on average, you hold 3 times more risk. What kind of return are you getting? Or I should say, what type of return are you expecting? The expected return of the down run stocks, of the money losing stocks, is 6.1%. The return of the up run is 4.76%. So you hold 3 times more risk and you expect returns to climb from 4.8% to 6.1%. Okay. That's an interesting observation, if nothing else. There's a lot of very interesting stocks out there. You know, 25 stocks that you can hold on your own. Makes you wonder, you know, what are they, Jeffrey, and how can I be a part of it? So I'm looking at them now. You can give me a call. We can talk about it. You buy a run for tomorrow, or however you want to do it. So what did we talk about today? We talked about, there's a theory that housing is getting weaker, at least in San Diego, but I don't know. The truth is, you've got foreign exchange. The US dollar is stronger today. The euro dollar below 1.2 is just crazy talk. Let's take a look. The easiest way to find it, I like FinViz because I like the visualization of it. And if you go to FinViz and you go to Forex, which stands for foreign exchange, you see the euro to the dollar is 101.76. Okay, so that is really, really a weird number. The Canadian dollar is at $1.3042. So the US dollar is worth $1.3042 Canadian. That's a weird number, okay? Gold at 1763. Bitcoin. Of course, there was another bankruptcy. Bitcoin is holding its own at 20,000. Yeah, the bankruptcy stuff doesn't matter at the moment. So Bitcoin at 20,000. So then the question is, the dollar's becoming much stronger. In fact, gold is 1763 an ounce. Gold, the dollar's stronger even relative to gold. Right, the dollar is strong compared to oil. Oil's at $100. West Texas Intermediate, it's at $100. The dollar is strong. The dollar is strong and interest rates are low, going lower. So it's so interesting. Dollar strong, interest rates getting lower. Asian markets were down, but European markets are up. So Asian markets were down last night. So there has to be something in the news. Silver at $19.21. That's kind of low. Copper at $3.42. 42 cents is middle of the road. So I don't know what I'm seeing here. What does this all mean? Where do we go? How do you trade a market like this? So I'm trying to figure out. Recession watch. Is it time to buy? All right. Well, let's take a minute because this isn't clear to me, right? I'm buying 25 stocks and holding them in order to make a couple of percentage point more return is good if you're like a hedgy, right? If you're a hedge fund, if you're that kind of person. But if you're a regular investor, what does all this mean? Oh, by the way, the breadth of the market, you had 1,040 new lows yesterday in the stock market and 31 new highs. That's a 33-to-1 ratio. New low to new high. Fixed income, 736 new lows, 48 new highs. That looks like about 15-to-1 ratio. So the question is, so I don't know if there's a recession. I don't. And I don't know how to know without the data just coming out. I'm not an economist that way. So let's play a game, right? If you think the market's going into recession and recessions make stocks go down, you have to believe that first off. Then if you have recession fear, what do? So here's the game. If both parties buy or hold, if everyone just holds their stock market doesn't go down. Everyone breaks even. It's actually a great outcome. You might make your 5%. You get a dividend, whatever. But if player one decides that, well, if I buy and hold and you sell, then you get 10 and I lose 10. Because if I buy and hold and you sell first, then I'm going to sell after you and I'm going to lose. Here's on the other hand. If I sell first, if I sell now and you buy and hold, I gain 10 because I get the best price and you lose 10. If we both sell at the same time, we both lose 10. So the equilibrium in this game is that everybody sells upon risk of a recession. Just is what it is. And so because somebody holds, somebody else sells, somebody else makes it better, gets a better outcome than I do. So that's what I worry about in this market. I'm really not seeing it in the indices. But there's a lot of stocks that are down. And so we have a list of what we call the downtrodden. First, let's take a look at our plays. We got some plays. We're up $8.90 this morning. Rich. Rich beyond our wildest dreams of avarice. So pre-market, banks and financial services are down. That's weird. I don't know why that would be, but they are. Banks and financial services are down 0.4. Corbis is up 3.25%. Maybe this is the day when Corbis, CRBP, climbs back to $1. And I finally get to buy some new coffee. God, I'm drinking this crappy coffee. I'm so tired and I can't get good coffee. But it is interesting that banks are down. So let's take a look if that's true. We have a whole bunch of banking stocks. Banks where the prices should go up. And you see 3 of them are down in pre-market and 1 of them's up and nothing else is trading. So that's interesting. The banks are not trading. Did nobody come to work today? I hope that's not the issue, that like something bad happened. I don't want to think about that. We already had a shooting in my town. It's the most violent day in Highland Park's history. I think we lost more people yesterday than we lost in World War II. So, that's not helpful. Money managers. They're down pre-market, but not dramatically, and not everyone traded. So, that's another thing to talk about. So there's a lot of stuff in here. The other thing I noticed is not as many stocks are trading pre-market. The ones that are trading are not moving as much. Smaller moves. So that's interesting, because that means some of those big bets that we would see that would kind of move the market before it even opened, you still see moves like in chips and semiconductor, but tiny, less than 1% moves. Still down. Less than 1% moves. Trucking, transport, tiny moves. So it's still down. I mean, this is a down morning. It's a red morning. Specialty retail, furniture. This is always our recession indicator. I mean, Carvana's down and Party City down, but those are like bankruptcy risk. Those are companies spiraling towards the drain. That's not an indicator. The Gap is down less than 1%. All right, so Foot Locker's down, but Foot Locker had some issues. They did some buybacks or something that weakened their balance sheet. Hanes Brands is up. Advance Auto Parts is up. Petco's up. Cannabis is up. One cannabis stock. Yeah, not compelling. So we have the walking wounded. How are the walking wounded doing? Well, Carlisle continues to fall. You know, we're going to have to relook at Carlisle. That would be more of a value play if we buy it than a game and gaming it. Cleveland Cliffs recovered up over 15, which was nice. Thought it was going to close under. Freeport McMoran, another one that we look at. And then like weird stocks like AutoWeb, Bed Bath & Beyond, Tupperware, NGL, Energy Partners, Summit Midstream. Yeah, Summit recovered at almost $13. It's actually pretty healthy. That's a tough one. Yeah. So let's close out. I mean, I don't want to keep summarizing because you've been watching the video, right? But there's a couple people watching. Maybe it's worth it. So we look at banks. And you can see the European banks, Deutsche, UBS, Credit Suisse, are all down pre-market. They probably fell when the European market was open. But then you got like Wells Fargo's down pre-market, Bank of America, Citigroup, JP Morgan. The bull 3x shares, banking ETF is down. Signature, Regions, US Bank. So the larger banks are down. Ally Financial, that's interesting. So most of the banks are down. Interesting, right? Futures are down. Recession risk. So what do you do if you're out there? If you really want to be in the market, you buy the 25 stocks that are model picked right now before the market opens, and you hold them throughout the day. And then if you need to, you hedge away your S&P 500 risk. The reason you do that is because these 25 stocks are really, I mean, I'm looking at them, they're not bad. They're all pretty downtrodden. You're buying cheap, you're buying discount, but you're buying stocks that kind of move away from each other. And so they should overperform the market. Do not catch falling knives. Do not play games. I'm looking at these. So the ones to avoid: Indo, Fun, RGC, Lightwave Logic, a bunch of therapeutics companies. It's saying to, I'll show you. These are the down stocks not to buy. Just don't trade them. I mean, if you're going to trade them, you're just trading pure naked volatility without direction. So I guess if you're going to buy and sell and scalp, it's fine. Lightwave Logic is the worst performing stock. And we followed some of these actually. I know them. I like Regan Cell. I love the story. It's a good story. Funware. It's not a buy. Regan Cell is not a buy. It's just a fun story. So do your homework. Indo, Redbox Entertainment, Quantum Computing Inc., Mullen Automotive, Backed Holdings, View. Oh my God, this is the meme capital of the United States here. BBIO. 9. They're all back. They're all back. Vinco Ventures, BBIG. Singularity Future Technology. Arcit Quantum. So, Revlon in bankruptcy. So, these are the ones, I'm not going to show you the 25 to buy. That, you got to buy a run. But this is interesting. These are the ones that are just total garbage and it's awful. By the way, what I also noticed is that there's some stocks with very high volume yesterday that don't normally have high volume. Maybe that's worth a share. Yeah. Here's stocks that traded at 3 times volume, last year's volume. This is the kind of stuff I love it because you can see it, right? So Front Door, CDK Global, Schweitzer Maduit, Prophase Labs, CTO Realty, Chef's Warehouse, USA Trucks, Kronos Worldwide. Do they do the time clocks? I think so. American Resources. So this is one we had invested in a while ago, which is A-Mark Precious Metals. They have the gold stores. Albertsons, a retailer. Tupperware brands. So some of these, like Tupperware, I think fell a lot, which is interesting. So these are the stocks that have high volume. These are the stocks that are like in play. And that's interesting. It's interesting to know that because you might just decide to take a runner on some of those. And so I'll leave that up for you. So I want to thank you for watching. I'm going to take a look at the futures while I wrap up here. I want to thank you for watching. So here's the deal. We make the videos as much to help ourselves as to help you. Gets us to the office, gets us looking at all the data, gets us looking for insights. Today it's so frustrating because I don't exactly know what's going to happen today. The markets are down, the banks are down, but there's not a lot of trading going on. It's almost like people stayed home, right? Not a lot of movement in the market, pre-market. And the movements that we see are small. Pre-market moves. So 2 banking stocks in our banking index are up. A bunch are down, but not a lot traded. Mostly they don't trade. And then you see it's the large caps and the Europeans that are down. We look at our walking wounded, which is stocks that have been down a lot. And you see it's Coinbase and Carlyle Group. There could be some value there. Could be. Coinbase was up a lot yesterday. So, but it's a lax market, a lackadaisical market. So we make the videos to force ourselves. Look at our runs, look at the market data. What's the trade today? What's the market going to do today? And even if we don't bet a lot more money, we still have 70 grand in the market. We're still losing our shirt. We're trying to make it back, right? Trying to make it back. But for regular retail that might have bought low and held, I just want to show you, you're at a 33 to 1 new low to new high ratio on stocks. You have 15 to 1 new low to new high ratio on fixed income corporate. Interest rates are down. Now, interest rates being down should be good for the consumer. It should be good for companies. It should be good for banks. Commodities, low or kind of middle of the road. And the US dollar is on fire. The US dollar is doing great. They must think we're going to jack interest rates to 10% or something. So Mr. and Mrs. Market don't think so. Jeffrey, what do you mean by that? So the market determines bonds and notes. The market sets the 30-year bond rate and the 30-year bond value and the 10-year bond value. And you see how they have been climbing since mid-June. It's a steady, relentless climb higher. Bonds are worth more. Interest rates are down. It's just true. You see it. You don't have to say whether you like it or not, but you see it. It's the market is rushing to buy 2, 5, 10, 30-year bonds and US Treasury securities. My guess is they're also rushing to buy agency debt, but I don't see it quite as clearly in the data. But maybe if I look again, yeah, advancers 4 to 1. 4 to 1. So people are rushing to buy debt, buy fixed income, but not the ones at new lows. Middle of the road and investment grade debt. Okay, interesting, right? You know, gold's down in US dollars. It's because the dollar's stronger. So dollar is stronger. So that's where we're at today. So again, thanks for watching the video. If you like the video, there's a subscribe button that YouTube has. We don't get paid for the videos. We're not monetized. All it does is it helps YouTube to share our message with others. So it helps us, helps spread the message. We don't advertise our videos. We're not promoting them. We just, throw a link out there. And leave a comment. We like when you comment. Drop a comment below. Even just say thanks for the video would be great. The other thing we do is we tweet. So Chicago Quantum, I got my stock game for recession fears. It's Chicago_Quantum. So I love it. If you want to shoot a tweet or respond to a tweet or retweet or something, right? Name me in a tweet. We'll chit chat. That's good. And see, because every day we're getting more and more comments, right? Love it. So somebody asked a question about whether there was a Federal Open Market Committee meeting today, and I said no. Here's the calendar. It's just the Federal Open Market notes, meeting notes from the last meeting. Yeah. So that's where we're at. Thanks again. Let's see. One last look at the futures. Futures are red. I say the whole thing is non-committal this morning. So our call is we're non-committal on the direction of the market today. I don't know. I know the dollar's stronger, but I'm not sure whether people are going to move from fixed income and hiding their money and taking risk off the table to putting risk back on the table. So that's what we're going to find out today. And in terms of news, I didn't see any news really worth talking about. Even the housing industry isn't clear what's happening. So I don't want to see that because that is my town. My town is like Columbine. I live in Highland Park. Those are my neighbors. That is my war memorial in my town. And that's where the shooting happened. So we were almost there. We actually go to the parade. And we told everyone we're going to the parade. Chicago Quantum would be at the parade. Normally we march in a parade because we're politically active. But we stand right where the gunman was. Right, he's on the roof. We normally are right below where the gunman was. So he would have seen us. He would have looked at us. Hopefully he would have liked my Superman shirt. But I got a young daughter would have been there. Makes me upset. But so where's the news? Is there anything about business in here? Where's the business? Is there any business? That's kind of what I'm looking at here. Averted? Oh, they're not going to make Europe not have any oil. Dow recovers from 700-point drop yesterday as investors look for signs of recession. So that was the whole point. We don't know if we have a recession. Now we're talking about rolling back tariffs with China, but they didn't actually do it. I thought they actually did it. So there's no news. All right. You guys take care. Good luck in the market today. Our trade, just so you know, is we are betting against Bank of Hawaii, and we are betting against Lakeland Financial Corp because they borrow short and lend long, and we're not sure why they think that's okay. They are risking their depositors' money and their shareholders' money by buying long-term mortgage-backed securities and long-term US Treasury and municipal debt. Now, interest rates fall, debt gets more valuable. Since mid-June, this has been the worst trade. However, we entered the trade before mid-June, and as a result, see where it curves down? Right there between June and July? That's where we started making a trade, right? And so we were so happy because their balance sheet is going to drop. Their shareholder equity theoretically could almost go to zero, those two banks. And then they're going to need to be bailed out or sold. And the stock, not necessarily to zero, but the stock will drop dramatically and quickly. So when we see 30-year bonds hit 141.91 while we're watching, it means that 30-year bonds are recovering. It means these banks are being given a second chance. This is what it is. Second chance. You know, not everyone gets a second chance. But the banks that we're investing in, they are getting a second chance because bonds and notes are becoming more and more valuable as we watch over the past 2 to 3 weeks. All right. Take care now. Good luck in the market. God bless you. Stay safe. Keep your eyes open, by the way. One last thought. So we got teased the night before the Highland Park mass shooting. We were at a fireworks display in Roselle with family, and a couple of young women who were wearing politically active t-shirts said, "Can you watch our wagons? We're going to go for a walk." And about 10 minutes later, they're not back yet, 15 minutes, and I'm like, "Guys, I'm going to check what's in the wagons, make sure they're not ticking." Right? "Oh, you're overreacting, you're stupid, you're paranoid." They start telling me how paranoid I am. So I go and I check. And the wagons was just like a bunch of kid stuff, like blankets and formula and whatever, so it was fine. They come back eventually, and it was all good. And I said to them, "Look, you got to check. It's odd to leave 2 wagons covered with blankets in a crowded festival and then ask some perfect stranger to watch them for you. That's how you get in trouble." So I said, "Guys, just be careful." And so just look twice. And if you see something, say something. Because you could be the next Highland Park. And so maybe you can avoid it. So, again, thanks a lot. Good luck in the markets. Yeah, I could see the The futures are even less red now than they were before. So I don't think the market knows what it's doing today. Good luck. We'll be here. Give a call if you need something. Bye bye.